Hello friends, welcome to my YouTube channel Netaji Tally Education Center. Friends, please subscribe to my channel without fail. Friends, like my video and share my video.
Hello friends, in this video I am going to explain you how to enter adjustment entries in Tally ERP9. Regarding this today I will explain you. Okay friends, so first we need to understand about what is adjusting, what is adjustment entries and objects of adjustment entries and important adjustments. Regarding this today we will discuss it. Okay, so go for the notes. What is adjustment? Adjustment in final accounts mean bringing into record all those items which have not been included in the trial balance. Okay friends, which are not included in the trial balance, that all transaction we need to bringing them to books of accounts. In other words, they mean bringing into records all those items of expenses and losses, incomes and gains of the current period which have not been recorded in the books of accounts. That is called adjustments. So next one, what is adjusting entries? The various adjustments in final accounts are effected by means of journal entries. Such of the entries passed for the adjustments at the end of the trading period are called adjusting entries. Normally, the adjusting entries are passed in the subsidiary book called journal proper or proper journal. Objects of adjustments in final account. The objects of making adjustment is to include all expenses, losses and incomes relating to the accounting period in the final accounts, and to exclude such items of expenses, losses and incomes from the final accounts which do not relate to the accounting period. Without these adjustment, result will be misleading. Following are the main objects of adjustments: to ascertain the true profit or loss of the business. Second one, to ascertain the true financial position of the business. Third one, to make a record of the transactions omitted in the books. Fourth one, to rectify the errors committed in the books. Fifth one, to complete the incomplete transactions. Sixth one, to make a record of such incomes which have been earned but not yet received. Next one, to make a record of such expenditure which are incurred but not yet paid. Next one, to make adjustments if incomes already received but not yet earned. Next, to make adjustment of such expenditure which have been paid but not yet incurred. Next, to provide for other reserves and provisions against asset owned liabilities to be owed by the business. Next point, important adjustment. That means what are the adjustments? Closing stock, outstanding expenses, prepaid expenses, outstanding incomes, incomes received in advance, bad debts, reserve for bad and doubtful debts, provision for discount on debtors, provision for discount on creditors. Next one, depreciation, appreciation, interest on loan, interest on capital, interest on drawings. Okay friends, but today we are going to discuss how to adjust interest on capital, bad debts and how to transfer net profit to proprietor's capital. So regarding this point we will discuss now. Okay. So this is the supporting transaction on adjustment. This is not a adjustment transaction. This is only supporting transaction for adjustments. Okay. Mr. Ravi started his business with cash rupees 1 lakh, Canara Bank rupees 10 lakh received as a capital. So this is the capital investment by proprietor. Cash account debtor 1 lakh, Canara Bank account debtor 10 lakh, to Ravi's capital 11 lakh. So now create the necessary ledger account for this. Okay. Go for the tally, accounts info, select ledger, select single ledger, create one by one. Ravi's capital. Under capital account. Press enter button or press Ctrl A. So next ledger, cash. So cash and profit and loss account ledgers are default ledger account in Tally. Okay. So don't create the cash ledger. So next one, goods purchased from Bhavani agency rupees 5 lakh. Invoice number 6379, GST at 18%. Create purchase account, CGST at 9%, SGST at 9%, and Bhavani agency. Purchase at 18%. Under purchase account, inventory values are no. Set alter GST detail, yes. Purchase taxable 18%. Goods, type of supply, goods. So next, CGST at 9%. Under duties and taxes, select GST, select central tax, Ctrl A. SGST at 9%. Duties and taxes, select GST, type of duty / tax, GST, tax type, select state tax. Ctrl A, accept. So party, Bhavani agency, supplier. Bhavani agency. Their supplier, all supplier comes under sundry creditors. Ctrl A. So next one. Goods sold to SLV distributor rupees 9 lakh, GST at 18%, invoice number 7539. SLV distributor's account debtor to sales at 18%, CGST at 9%, SGST at 9%. CGST and SGST already created. Create two ledgers, that is SLV distributors and sales at 18%. Customer, all customer comes under sundry debtors. Ctrl A. Sales at 18%. Under sales account, inventory values no. Is GST applicable? Yes, applicable. Set alter GST details, set to yes. Nature of transactions, select sales taxable 18%. Goods. So next, received rupees 10 lakh by check from SLV distributors. Canara Bank. Actually, in first question we needed to create Canara Bank. Okay, I forget it to create that Canara Bank. Now I will create Canara Bank. Under bank account. Account number, IFS code, branch, Jayanagara, 4th block, accept. SLV distributor already created. This is our topic questions. These are the adjustment entries. Charge interest on capital at the rate of 5%. Create interest on capital. Interest on under indirect expenses. So next, bad debt rupees 62,000. Create bad debts. So party ledger already created, but here Ravi's capital already created. Profit and loss account. Cash and profit and loss account or default ledger account tally. Okay, don't create profit and loss account. And Ravi's capital already created. Now go to the transaction entries. Escape. Accounting voucher. First score. Receipt voucher. Press F6. Credit first. Ravi's capital 11 lakh. Cash 1 lakh. See here cash account data. So in receipt voucher, credit entry first. Next debit entry. So cash 1 lakh. Canara Bank 10 lakh. Accept. Next purchase entry. F9. Control V for voucher mode. So invoice number 6379. Credit first. Bhavani Agency. $5,90,000. New reference. Purchase account 5 lakh. CGST 45,000. SGST 45,000. Accept. Next sales. Control V for voucher mode. 7539. So debit SLV distributors 10,62,000. Type invoice number 7539. Sales 9 lakh. CGST 81,000. SGST 81,000. Okay. So next, received rupees 10 lakh by check from SLV distributor. Canara Bank account data 10 lakh to SLV distributors 10 lakh. Go to the receipt voucher, press F6. Credit first, SLV distributors 10 lakh. Against reference, Canara Bank. Till now what we entered, that is supporting transaction for adjustment entries. So now adjustment entries will start. Okay. Charge interest on capital at the rate of 5%. Interest on capital account debtor 55,000 to Ravi's capital 55,000. So total capital is 11 lakh. 11 into 5 divided 11 lakh, 11 lakh. 11 lakh into 5 divided by 100, that is 55,000. Okay. Go to accounting voucher, press F7 for a journal voucher for adjusting all the entries. Select interest on capital 55,000, Ravi's capital. So second adjustments. Bad debt rupees 62,000 on sundry debtors, that means customers. See here, display accounts book, ledger, SLV distributor. So their balance is 62,000. Just assume, since long time he has not paid anything. So businessman will treat this is as a bad debts. So close this account to adjusting bad debts. Okay. Escape. Voucher. Bad debts 62,000. SLV distributors. See, SLV distributor accounts as closed. Zero balance is showing. Against reference. So next, very important, many of the people don't know how to adjust net profit to proprietor's capital account. Okay. So here I am showing profit and loss account debtor XXXX to Ravi's capital XXS. This is the journal entry for transferring net profit to proprietor's capital account. Okay. So see the net profit. Escape. Profit and loss account. Alt F1 for detailed view. So net profit is 2,83,000. So you have to transfer this amount to proprietor's capital account. So check it in balance sheet. Alt F1 for detail. See here, including interest on capital 55,000. So total capital liability is 11,55,000. So profit and loss account here showing 2,83,000. You have to adjust to proprietor's capital. Okay. So go to the journal voucher. Profit and loss account debit 2,83,000. Now it is 0. Ravi's capital. Ravi's capital. So these are the 3 adjustment entries I shown. In my next video part number 2, I will show other adjustments. Okay. So check the report. Come to the balance sheet. Alt F1 for detailed view. See here, profit and loss account. Earlier it is shown here, but now it is shown here itself because we are adjusted to proprietor's capital. So 11 lakh plus 55,000 interest on capital plus 2,83,000 net profit. So all the total is 14,38,000 is the proprietor's capital liability. Okay. So in this way you have to enter adjustment entries in Tally ERP9. Okay friends, in my next video part number 2, I will show other adjustments. Okay. Thank you for watching my video. Please subscribe, share and like my video. Thank you for watching.